Good afternoon, Quasar Markets Live. I've got the machine here, Jim IUORIO, man. Jim, how are you, man?
I'm very good. Thank you for having me, Stephen, as always.
Yeah, look, the word that I keep hearing on Wall Street and in Chicago now is the word clarity. Is there more clarity now as the trade war, I guess, is starting to see more fruition?
I think we're becoming used to it. At the same time, there's slightly more clarity. But I think the bigger issue is that, we're just, we're given this set of circumstances. And after a time, it's like, okay, the world's not ending. So let's look at what's really out there. Now, the lows, the stock market lows that happened in, I believe that was mid-April. Those were the most asinine and emotional lows I've seen in quite a long time. I did a poll on Twitter, 200, 300 different money managers, and they said they were hearing the same thing from all the people who were selling stocks. And basically, it was just an emotional response to their dislike for the new administration. Well, that's stupid. It's one thing if you are doing an analysis of policies and saying, well, because of this, this, and this, I don't think stocks will return as well, so I'm lowering my allocation. But to just be like pulling your hair out and sell, 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 that was idiotic. And I think that was an interesting and probably a generational buying opportunity.
Yeah, when I saw that, the capitulation seemed to be very happy. I was happy about buying down there in those lows. It just seemed that the retail was nervous, jumping on it with zero DTEs, all the things, the gambling version side of this. It's what it felt like to me. I took advantage of that. Are you seeing on the institutional side, not just the retail side, that same feeling?
Which is funny is that no, it doesn't really seem that way. I'm of all the stuff I've been looking at, I've not seen many signals from the institutional sides. And I know as guys like you and I are taught to look at that a lot more than the retail side, because the retail is oftentimes the dumb money. But no, the retail side is what really underscored the emotion for me more than anything else.
Yeah, and when you look at the president now, he seems to not be just sitting behind the bully pulpit anymore, but he seems to be going around the world now and going to UAE this week and Saudi. He seems to be taking this by the bull by the horns a little bit.
Right. And I think one of the biggest takeaways from the Saudi meeting is that it's inarguably a good thing that he's going out there and trying to negotiate new deals with Saudi Arabia. They have been, for some odd reason, intentionally, seemingly keeping the price of crude relatively tame for the entirety of his presidency. So you can say, well, they want him to succeed, they're scared of him, whatever. But whatever it is, they're keeping the spigots on, keeping the supply out. Yes, in the long run, they're trying to grab market share, but they're making him look good. I don't know what the reason is, but I know that we're the beneficiaries of that too, because I think the crude prices being tame for these last 3 months are a much bigger story than people are talking about.
Yeah, one of the stories that I said at the beginning of the year that I thought would be hot would be mergers and acquisitions, and we're seeing quite a bit of that now, especially looking at Kraft Heinz possibly. We saw this morning, and I've been calling it for a while, Foot Locker with DKS. It seems that while maybe the institutions, the retailers aren't excited, maybe it's the companies themselves that are more excited about business right now.
Yes, and I think that the next stage, because when Donald Trump, I thought he should have gone with tax relief and regulatory relief up front to kind of set the stage in a positive tone. He made the calculation to go with tariffs and trade negotiations first. And I think the reality is that he knew that was going to be messy and could potentially be ugly. And he wanted to get that done early so it's not still resonating when the midterm elections come in the middle of the next year. So now we're on to bluer skies, greener pastures, whatever euphemism you want to hear. And I think it's going to be about taxation and regulation. So why shouldn't they be happy? Like you saw that spike in small business optimism, which by the way, it's reversed about half of that move, but that was the biggest move higher in the history of that index when Donald Trump became president. It is nice if you're a corporation and people aren't telling you that you're price gouging and we need to ground you into the dirt. When we believe that the administration has our back, it's a bigger deal.
Yeah, when you ask that question about business feelings, and there were two sides to this. The first side that I said was look at the business optimism index, and while was higher but they got nervous during this whole tariff thing, and okay, so we heard this week that Walmart's going to continue. They're going to watch for the price hikes, and Microsoft raised their Xbox prices. If this all gets solved, will they be bringing the prices back down, or is it they're just saying no, don't care?
Prices never get brought back down, Stephen. And by the way, I'm in the restaurant business, okay? And when prices on the menu go higher, and then oftentimes people will see beef prices go down or egg prices go down, like, are you going to give relief? No, we can't give relief, because when we raised the prices the first time, we took smaller margin. This goes for my restaurant. It goes pretty much everywhere else too. We were willing to have a little bit of a smaller margin, and we don't know when the next shoe is going to drop. It's not good business to bring prices back down as much as we all want it. That's why what we want is disinflation. You don't really want a situation of deflation, as you know that. I'm just talking to the people watching.
Yeah. Let me ask this question. This morning, Powell, that chair, said something very interesting this morning. He said, we've got to look again at the average inflation rate. He has been talking about 2% since the day he was probably born. I think he came out of his mom going 2%, 2%. He's now saying I want to change that number. What in the hell is going on, Jim?
So he is very clearly, did he state before we got to summer of 2021 when inflation started to take off, that he wanted inflation. He wanted inflation to run hot and run hot for a period of time to average it out over the last few years. And he's been very consistent about that too. But it is, make no mistake about it, the reason they want inflation to run over 2% is, you and I know, it's a monetizing the debt thing. So every government that has way too much debt in an inflationary environment, that debt looks way more manageable. So he literally made the choice to take money out of the average Joe's pocket in the terms of inflation to be able to bail out the indebted government entities. Now, I'm not particularly comfortable with that choice. And Jay Powell seems like a hell of a good guy. When I hear him talk, he seems smart. Yeah. He seems like a kind guy. But I will, in 20 years from now, catch me. I'll be 80 years old, but I'll be talking about what I believe was a failed Fed chair. And it is mostly because he hit the gas when he should have been hitting the brakes in the end of June and July. I'm sorry. If you put yourself in a prominent position like Fed chair, you have to be open to criticism. And I have zero problem criticizing him. I give him an F. You?
Yeah. I don't think there's a letter below F, but if there was, I think that's what he would be getting from me. I think when I was a child, it was U or an S, unsatisfactory or satisfactory. He's getting an
unsatisfactory. U. Right?
Yes. I will say this much. I think with Trump is right, but he's got to lower rates. But when we look at the Fed tool, Fed tool, it's all saying not until July will he now lower rates. It's not going to be now until later. It keeps getting pushed out. And he keeps changing the goalpost here of what he considers his dual mandate, right? We know what the dual mandate is. We've been told this, beating our heads by him, and now he wants to change the one side of the dual mandate. But he's not bending to political pressure, right?
No. And I don't think he's bending to political pressure at all. And I really actually like that. I think actually it might be having the opposite effect. He's a proud guy. You're a proud guy. I'm a proud guy. When someone's your boss like Donald Trump and you think they're taking unfair shots at you, it is not unreasonable for me to think he might go the other way a little bit. That being said, I don't think he is. I think he does. He is still in a bit of a dovish camp. The CPI numbers that came out on Wednesday at 2.4 were not, those are Tuesday, I guess. Wow, the days run together so quickly. 2.4, that was a nice number for the markets. The markets seem to like that. Jay Powell seems to like that because it clears the runway for cuts. But by the way, the economic condition is not screaming cuts, but inflation is coming down. And he believes that we're above the neutral rate. So that's why they're still pricing in 2.5, 25 basis point cuts, which I don't necessarily believe that's going to happen. I think maybe 1 in 2025.
Yeah, but you also see these companies that are cutting jobs, right? Microsoft just said they're going to cut 3% off the top. I mean, there's some major companies saying, hey, you know what? The economy is not that great. I'm going to cut some of you fellas. And they're doing it now, right? And that's part of the dual mandate, right? Is to cut some of these rates because of job losses.
Right. And that's something that he's going to be watching very, very closely as well. He should. Now, when it's just a couple names, so sometimes we get a bunch of names at first, but then you got to look for a pattern developing too. Within the tech industry, something unbelievable has happened over the last 5 years, and it is partially AI related. Everybody wanted to hire tech workers. They couldn't get enough of them. There was a shortage, and it changed so quickly. That's pretty amazing to me. That nobody wanted tech workers anymore. Nobody wanted to write code because AI can write code for you. And I know I'm oversimplifying this by about a factor of 10, but it's in there. And I think that's something to watch too, because the productivity that AI brings could be a little bit disruptive for jobs too. But I know the labor market has been the thing that has been perceived to be strong. I think it was crap. I don't think it was strong at all. I think it's strong if you count government jobs, side hustles, Uber Eats drivers over the last 4 years. But I think that that's something that Jerome Powell is going to be watching very, very closely for cracks.
Okay, so here we go. We are now almost got that V-shaped rally. It's almost incomplete. It's not quite there, but we are now positive territory in the S&P and NASDAQ. What's your thoughts about the future here? What are the next few months bringing to you? Are you positive on anything?
So in the equity markets themselves, okay, we are talking on Thursday the 15th. We will settle a week tomorrow. I think we can settle a week above that 200-day moving average, above back where the 50-day crossed the 200-day back when it was about a month ago or so. If we can settle the week above those levels and then put any sort of strength in it on Monday, I will believe that we are going after the highs of 6,200, I believe, in the S&Ps. I think we're going after those highs, but I'm not convinced that in what I believe is still going to be considered one of the more tumultuous economic years, I don't believe we're going to have the backbone to push through those levels right away. So I have calls on that I put on a couple of days ago, and as we rally, I keep selling those, making them into call spreads, selling those 6,200 calls, because I don't think all this is over yet. But it will go a long way for me thinking the stock market is going to be buoyant if we can have a good, solid close on Friday and then some strength on Monday. Make sense?
All right, Jim IUORIO. That's a big bull call. I love that. You always put your money where your mouth is. I will see you in a few weeks, Jim.
Thanks. Have a good time on your trip, and I'll see you when you get back.
Thanks, Jim. Bye-bye.
Thank you. I'll see you soon. Have a great trip. See ya.